What's happening, traders? It's your boy Atlas back again with another video, and this video is for Mario Pasmino, who asked, how do I manage my trades? So I went across the sphere of Forex peers and chose the Aussie yen because it had a beautiful setup recently as well. This began on the 2nd of January. And let's just go into this and dive in. This is a replay as well, so there's going to be extra bars coming out over on the right-hand side here. So we're going to play it from scratch, right? But before this level even comes into play, there's a few things that I want to make clear that I'd be looking out for as well, right? So number one, I like to see daily event breaks if they're there, right? So let's just grab this tool here and let's put this here. Now, a daily event break, if supply zone is activated, we're just looking for bullish engulfing candles, which would be demand, right? So let's just clone this and let's move this down here because this got broken also, which is perfect. The main thing I'm looking for, if it broke past this and didn't break past this, I wouldn't be fussed because I'm always looking at the break, the event break closest to price, all right? So that would be this one. So now the market's come down here, broken through this first event break area. It's broken through another event break area. So what we're looking for, as soon as the market comes back into this, what's the next thing we're looking for? We're making sure that as this market has entered the supply zone and activated the event one, we are looking for all white candles. This is perfect, right? Perfect. So now we have our profit potential. And if we take a look at that, what is that right now? Profit potential of around 242 pips. Okay. And it could potentially go further, but we know that is our initial profit potential, right? Which is amazing. So let's continue. Let me just get rid of these. We can keep these in just so you're aware of them. So let's now drop down to the H1 chart. And we've got our event break area. It's shallow, but nonetheless, I mean, if this, hold on, let me just change the color of this. If this was the initial event break and we didn't have these other candles in the market pushed out, I potentially wouldn't be looking at using this as a trigger area. But because we had these candles push a bit further down, I considered it, right? I would consider it, I should say. So now that we've got our event break broken, all right, which is a drop base rally, bullish engulfing, we now use this area as our trigger event. Short. Okay, so let's just play this out. And yes, guys, I've seen that this works. It's not a magic trick. All right, so perfect touch. All right, so now the market begins to move down. So now we are in the trade. Okay, we're in the trade now. Let's just grab the short position and look at that, risking 8 pips. It's just like it's 8 pips for 242. Like, oh, come on. I didn't even see that. I didn't even look at that before, how much pips I was actually risking there. But that's just ridiculous. All right. So now the market's moving down on the H1 chart. Now, personally, once this has entered the daily zone for me, right, and we've hit our trigger event, I don't look at the market on the H1, on the H4. I look at it from a daily perspective. So I look at the chart at the end of the day because at the end of the day, I'm looking for the next daily candle. It doesn't matter to me what's happening on the H1 or the H2 or the H4 or the 15-minute during the day. It makes no never mind to me. I am focusing on the daily chart to decipher what to do next. Okay, but in this instance, I'm going to look at it from an H1 perspective because I know there's a lot of you out there who are mainly day traders, or you are swing trading, but you're probably not holding trades as long as I do for like weeks and a month plus 30 days even. So I'm going to do this from an H1 perspective, just to give you some insight of how I would actually manage this trade using smaller time frames. Okay, so let's just continue here. Let's just keep going. So right now, this is our main low.
We now return to your regular programming.
All right, we've got a drop below there now. Not a deep one. All right, we've got our first real drop. Now, what I would do, I would then move. Let's just use this as a stop loss. Let's just change the color so we know where we're at. Perfect. I would now move my stops to this area here. Okay. So we are currently at 3 times risk. All right. Let's continue. Now the market's pulled back. We now have another low. And that's been broken perfectly. So again, I would now move my stop just a little bit further. Now we're at 5 times risk. Let's continue. And the reason why I'm putting my stops just behind this this area here is because what do we have? Like on the H1 chart, we've got a rally, base, and a drop. So if the market did come into this area, then what's more than likely to happen? Because we've got the daily level in charge right now, it potentially means that the H1 levels of supply on the way down will hold, right? So even if this market did come up here and you wanted to add a position, you could potentially play like an intermediate day trade, so sort of thing. So as the market goes in there, you could, if the zone was small enough and within your risk reward, within your risk parameters, you could just trade the zone straight away if you like. Okay, yes, there is, you could say that you'd rather play the event chain to get clarification, because at the end of the day, it could still just push through. But if you want to play the event chain, me personally, I'd like to be safe. I'll just play the event chain and look for a 5-minute event break and then let it play out. So let's continue. Okay. All right, we've got another pullback now. Let's move this here. So now what am I thinking? So this area is still available, right? It's still available. It's still free. And we do have, so we've got this here as a potential short. We've got this here also. But this seems to be used up, right? The market's popped, come into this area of, come into this bullish engulfing candle, which would be our demand. Touched it, come back into it, and then broke past it. So I could consider now that this level is fine to move my stops down to. Okay, so now we're at 7 times risk. All right, let's continue. Oh, we've frozen. Okay, there we go. And now we've got another. Okay, so we're in real time now. So this is where the market actually ends up, right? So now we are here. So now what I would do is let's have a look at it on the daily and see what's happening. Ah, okay. So yeah, lovely, 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 lovely. So now let's take a look at this from another angle, right? Daily, we've also got what looks like a engulfing candle here. And the market could potentially push back up to here. We've got a nice little level test, push back up to here, and then decide to push back down again, right? But sometimes when even wicks, right, when the area moves into a wicky zone, sometimes there is the potential for the market to just literally spin round and take you out, okay? It could potentially reverse at that point. So what I would do is, just to be safe, I would move my stops. Hold on, let's just move that the other way around. Let's move my stops here. I'm at 11 times risk, which, you know, that would make, I think, anybody extremely happy, right? We also have the fact that this market's pushed out of here, broken this low. It's pushed out, come back into here and broken this low, right? So if the market does push up, more than likely it will push past this area here. I'm more than happy to come up with 11 times risk. Okay, more than happy to come out with 11 times risk. But due to the length of this candle, I don't think the market would turn around at this point. I think it would potentially push down, right? And what do we have just below that? I mean, it's held for now, right? But really, I would potentially be targeting this area here for a total of 30 times risk. We've got some big pullbacks that we've seen already, so I'd potentially be targeting that. So I'd leave my stop there for now, and I'd just wait. Now, yes, you could potentially look at this during the day and, you know, start lining up zones to decipher whether or not it could potentially break through, and you're just then going to change where your stop loss is and so forth. All right, and that's totally fine. But right now, this is where I would be. All right, my stop loss would be at 11 times risk. Okay, but the target would be 30 times risk. And that's achievable, because if we look at the daily chart, we can see that's absolutely possible. Absolutely possible, without a doubt. Okay, and it's just amazing that I have risked 8 pips, number one, to get 11 times risk, and the potential of a 262 pip target from risking 8 pips. And that, ladies and gentlemen, is the fucking event chain for you. So that is how I would manage this trade. I would leave my stops right there. If I was extra cautious, right, being extra cautious right now, when that ended, I would potentially take off 80%, right, leave my stop there as well, and then just let it run down to this area here. Okay, I would take off between at least 70-80% of the trade, between 50 and 80% of the trade, and just let the market run. That's also another option. But if you want to get, you know, that trade in at 30 times risk or 11 times risk with your full position, then that is where I would be. All right, but you could also, as I said, just simply take off a percentage when at current market price, and then just let the market run. So that is that, ladies and gentlemen. I hope that this video has been informative. But you got to remember that this is just this particular trade. The market offers up so many different things that, you know, it's totally discretionary. Because I mean, let's look at this. If we was in this trade, for instance, we've got this impulsive move to the upside up to this level of supply right here, with all white candles heading up here. Like, you wouldn't even track that. You would just wait. It's just like you've got all white candles because I'd be looking at this from a daily perspective. So I've got all white candles at the end of the day, all to the upside. I could potentially just leave my stop exactly where it was and not even worry about it, because as we can see, we've got all white candles all the way to the upside, right? Or maybe if I wanted to, as this market's moving up here, I could potentially move my stop loss behind each daily candle, because we can see that we've got a really strong move, right? So it's really, really discretionary when it comes to how you manage your trades, because emotions come into play as well. And if you're watching it throughout the day, if you're a day trader, then you get caught up in the emotions of the highs and the lows and the pullbacks and stuff. So then you make decisions based on that emotion, which really you shouldn't be, because you shouldn't be watching the market. You should just allow the market to do what it's doing. But if you're a day trader, then your emotional bias comes into play, right? And then that causes you to do different things. So it just depends on what you're doing. And again, it's really, really discretionary. But look, anyway, I'm done. I hope this has been informative. I'll catch you in the next video.